Hey, good afternoon, everyone. Welcome to Moving Markets with Jeffrey Dunning, and I'm Kevin Hurley. Jeff, how you doing today?
I'm doing fantastic. You have a good weekend?
I had a great weekend. I was actually golfing down in Vegas. Picking up new business with clients down in Vegas. How about you?
Just a relaxing weekend at home. Didn't go anywhere. Didn't do anything. And best of all, didn't have a list of honeydews this weekend. So when I say relaxing, it was really a relaxing weekend. Didn't have to do anything.
Well, talking about relaxing, does it seem like our market is relaxed with awful news, awful expectations of the future? Nothing looks positive, yet we keep going up. Can you explain how this relaxed market is doing that?
I can't explain it. Really, truly, I cannot explain it. I look at this chart. I've got up on the screen, and I know most people listen to this on the audio, but a few of them, get on my website or your website and check out the video of this. I'm looking at this chart. I'm looking at 6 months. We've been bullish on the S&P for 6 months. Wobbly, no question. That's been a bumpy ride as it goes up. But we've been bullish on the S&P. We're not far off of the highs that we hit for the year back in mid-February before the rest of February and the first half of March went down. And I don't get it. I honestly don't get it because pretty much all of the news that we keep getting from one week to the next, from one month to the next, does not spell good things for our economy. But the market just seems detached from it right now.
So there's
No
nothing.
explanation.
There's nothing that says we're going to slow interest rates, that we have inflation under control. There is nothing that you can point to that says we're looking for bullish movement in our market anytime in the near future. Yet for 3 weeks in a row, we have an up market. Now, those first 2 weeks, it's a 1/4% and it's like 0.4%. It's not like it really moved up. In fact, that first week that we were up, we started down like 2.5% and crawled our way back to a positive week. But to say we've got 3 weeks in a row, last week was kind of the big up week, and I don't get it. I don't get it at all. It worries me. It worries
So,
me. Let
and
me put it this
I
way.
think you and I share a similar worry. But I've been saying this now. I've been saying this now for the better part of a year. It just feels like it feels like it's a house of cards. It feels like we're setting ourselves up for this big, ugly, nasty collapse. And I'm gonna quickly expand this chart out to a year, but it feels like we're setting up for this big nasty collapse. But I've been thinking for over a year that it should have been the case, and the closest we got to it, the very closest we got, we started out last year kind of ugly. The Fed started raising rates, started getting pretty aggressive with it. We had a sell off. We had an unexplained recovery in June and July, and then we had the big sell off in August. When we were going down in the first half of last year and we had that correction in August, this is what to me it felt like we should have been doing for a full year before that and ever since then. And yet, since that low that we hit in early October, you can't argue that's a bullish market.
So let me go conspiracy theory on you. Could there be behind the scenes, since we know GDP's kind of fudged a little bit now as they, magically make up numbers for what possibly could have been sold with some type of intrinsic value for art and so forth? Could we be seeing some manipulation preparing for voting years coming up here for another presidency and election and those kind of things? Could that be what we're seeing right now? Hey, it's not as
I'm
bad as it looks.
I'm not opposed to jumping in, with both feet to a really good conspiracy theory and say there's people pulling strings and manipulating things in an unrealistic way and that it's all, smoke and mirrors. I'm not opposed to that. It seems a little early for that to be happening. It seems like if you're gonna try and manipulate the market, why not let it correct a little bit more naturally right now, which is what it seems like it should be doing and is not doing. And then starting about January of next year, try and create a big market run up to, people stop paying attention around, I would say, early September. Well,
So let
I
me
take
give
that
you
back.
let me give you
Late
the
September,
answer to
early
that.
October. When you get down to about a month away from voting, 99% of the people that are going to vote have made up their minds, and you could have the stock market crash in the week before the election, and it's not going to change anybody's mind. Everyone will have something to blame it on other than the candidate that they want. But it just, I like where your head's at with this theory. It just seems premature to me.
So here's the answer to why it's so premature. Could it be that the administration has been so bad for so long that they feel they need literally a year to finally get some good news out there that people can remember, because things have been just garbage since day one? Huh?
Yeah, I
What do
mean,
you think?
there's something to that, and I wouldn't for one second suggest that's not a viable theory. It is really tough to figure out what's going on and why we've had now October, November, December, January, February, March. I mean, we're literally talking half a year, 6 months of much more bullish than bearish movement. You had a couple of strong pullbacks that never really turned into. Did either one of those ever really go into correction territory? I don't think they did.
I don't think so.
I
No.
mean, there are a couple of technical pullbacks, but 6 months from where we hit. I'm not counting that one day where the market dipped way down and then came back up. That's kind of a one-off. But if you look at the support line back there on the S&P, right around, I'm gonna call it 30, 35, 75 ish. I don't know what the exact number is, but I mean, you've had a roller coaster ride, but we're up what, 14, 15% since then?
Yeah, well, okay. I'm going to be honest with you. As I came back from Vegas, just pulling into town, my truck engine light popped up. And I'm like, you've got to be kidding me. What's going on here? And I just paid extra money to find out that the DEF that you use to stick in your diesel truck, that my belief is it's mostly water anyway, right? Was running low, and you got to get it filled up. So it cost me $150 for this water / little alcohol that burns exhaust a little bit better. Cost me $150 to get the stupid light off my truck. Which, again, ridiculous that if you own a diesel truck, you got to do that. You got to put a DEF diesel exhaust fluid is what it's called, to help the diesel burn better. Which I'm pretty sure when you put that stuff in, it burns worse and it's more deadly to people. But Jeff, it just doesn't make sense. With that said, pretty quiet week here this week before a holiday, Good Friday on this coming Friday. I don't think I'm going to do any big moves. In fact, I think I'm pretty much going to wait it out. I'd expect big money to come in at the start of the quarter, and obviously it hasn't today. In fact, a pretty muted day in the market as far as I'm concerned. But I don't know. Maybe this is just the week before the pause. I don't know if I've seen very much tax selling this week before people got to pay their taxes here on the 18th. I don't know. It's just pretty weak.
Yeah, I mean, there are a couple of reports. Tomorrow morning you get factory orders, and the JOLTS report. I personally feel this is one that gets sort of underreported, and personally that JOLTS report has a lot more information in it about the state of the jobs market. We've talked a number of times on
Right.
this podcast about the jobs market and how for a while that was keeping things propped up in the stock market. There are some chinks in the armor. Last week's unemployment number came in just a little bit higher than expected. There's going to be another one this coming Thursday. It's largely being ignored. Uh, the combination of the JOLTS report tomorrow and the broader employment report on Wednesday. These are potential market movers this week. But I think between now and next week, when the new PPI and CPI numbers come out, there's not going to be a lot that really changes things. Now, this will be interesting. James Bullard speaks on Thursday. Bullard garners a lot of respect within the financial community. He's not the Fed chair, but he's Fed Gov that packs a punch when he talks. People listen. I think of those old E.F. Hutton commercials from when you and I were growing up. When E.F. Hutton talks, people listen.
Yep.
Bullard is one of those people. People pay attention to what he says. He's going to get asked questions, and he's going to make comments that are either going to be perceived as very hawkish or very dovish, and you could see that move things a little bit. Is it a partial market day? Is the market closed out right, or there's some?
I always thought Good Friday the market was closed the whole day. Let me take
There's something that's open part of the day and closes early, but for all intents and purposes, it's a day off in the regular trading of U.S. equities.
And to be honest with you, big money is going to be out early. We're not going to see big money in Thursday, which might make it more volatile if it's just retail traders listening to, Fox News or what have you.
Is the photo op of Trump getting indicted or getting arraigned tomorrow? Do you think that's going to have any effect at all on the stock market?
Zero impact, if you ask me.
I think it's such a circus, and I don't care which side of the aisle you are on, and whether you think he's being, getting what he deserves or being treated unfairly or don't care. I think from the perspective of the stock market, no one cares.
Agreed. And Good Friday, April 7th, market closed for the whole day.
Okay, let me give you my little prediction for the week. I don't have a lot more to talk about, but I'm going to give you my week's prediction. I think this week is going to be more of a technical week than a news-driven week. I think you're going to get, whether it's tomorrow, whether it's Wednesday, whether it's Thursday, at some point in time this week, I think the S&P probably climbs a little bit more and tests this level of resistance up here around 41.75 and then backs off and retreats. So I think you might get a test of this, or you might just kind of get a flattening up by that number. And then I think when you get the official CPI and PPI numbers out next week, that's going to determine whether this market has a next leg up or whether it comes back down to the more recent support down here in that 3,900 range on the S&P. The Dow's a little bit of a wild card. I mean, the Dow was up today, but let's be honest, it was Chevron that was driving the Dow up because of OPEC deciding to. I know UNH also had a big upward movement, but really Chevron was driving the Dow today. So the Dow's an outlier. It may go up or down. It may be a little more erratic. I think the S&P, the broader market, ends up kind of flat on the week with maybe a generally slightly more bullish move, but not like a steep move like we had last week, but maybe just a little continuation of a run up to this level of resistance. And that's why I think it'll be more of a technical trading week than a news driven week.
Yeah, I agree. I think it's going to be mostly flat. I mean, it doesn't have to go up much to touch that resistance. So pretty flat, pretty quiet. Enjoy your Easter.
Any I think next week when we do this podcast next week on Monday, we will be like right at the beginning of the earnings season. I think we'll have a little bit more to talk about as far as some sectors and some individual stocks, especially some of the stocks that you and I both collar trade. Maybe talk a little bit about the right setup for those going into the earnings season. And we'll be talking next week about the upcoming PPI and CPI numbers and what the expectation is. But I think that's all I've got for today.
Well, actually, let me spend just a thought process, just something to think about between now and then. If you've taken a look this year, NASDAQ has the gains. Technology has the gains that you think would be affected by CPI, right? Or excuse me, inflation, not CPI, but you'd be affected by inflation as prices for their parts and their products become more expensive. But at the same time, they don't borrow because they're so cash rich. They're not borrowing money at this time to fund their operations. So it would not surprise me to see, I don't know, let's say a flat to maybe up 5% S&P this year, but a 20% up NASDAQ. You have any thoughts on that in general?
Yeah, well, again, we started this podcast by talking about how the market seems to be detached from the news and the reality of what the information on the ground is, and that is a weakening job market, higher interest rates, which means higher cost of everything. Even though inflation numbers have cooled a little bit, it's kind of like putting your hand on a red hot stove versus putting your hand on one that is beginning to cool off a little bit, but is still quite hot. Inflation is still quite hot, even though it is starting to cool off a little bit. This is just further evidence to me that we're detached from reality right now. And it's like we're living in bizarro world where the opposite of what should be happening is what is actually happening. I don't have an explanation for it. I do think before this year is over, we go into recession. I think we go into negative markets. The three major indexes, I think, are all going to finish flat to slightly down on the calendar year. But I predict that, and then I just see no reason and no logic behind what's actually driving and moving markets, and so I'll go on record right now saying I think the three indexes are going to be down this year, but I will not be shocked if I am completely and totally wrong, because this is just the thing we can agree on. I think is this is an incredibly hard market to predict.
Most definitely. In fact, I would tend to agree with you. I'd tend to agree with you 100%. I just don't understand. Yeah, there's a lot I don't understand. But I do know, if you remember the beginning of the year, inflation was supposed to cool, and we're supposed to have a recession the first 6 months, and then it'd be the back half of the year was going to be all the gains and the profits for the year. Look how that switched all of a sudden. It just doesn't make sense right now.
Yeah. For those of you that are a little bit newer to mine and Kevin's podcast, Kevin and I have been in agreement on a lot of things recently. Stay tuned in, because once in a while we feel very different about things, and we remain close friends, but we get a little bit heated sometimes. I think it's funny, Kevin, that you and I have had a streak of being mostly on the same page with things. Because we're in lockstep right now. I mean, I agree with you wholeheartedly. It doesn't make sense. It's hard to predict. It's going to be really interesting to see what happens. It seems like left is right, back is front, up is down. I just don't get it. But you can't deny that things have been on an upward run, an upward tear for some time now, and we'll see if it can continue. Seems like it can't last, but you never know.
Hey, just because I said Trump could be president from his jail cell doesn't mean that we disagree on the most important things.
Yeah, we'll talk more next week about the spectacle of that arraignment tomorrow, and see if it had any pull one way or the other on the market. I don't think it will have, but for now, I think I'm ready to sign off. You got anything else?
Nothing to tell you. You guys take care. Have a wonderful week. We look forward to talking to you next week. Jeffrey, thanks for being here with me today. I appreciate it.
Thanks, Kevin. See you.